Hi, Tim Bigham for Delta Derivatives, option hedges and edges, powered by the best option scanning tools on the market today, rb-trader.com. And taking a look at a Fed day, a two-day meeting, market grinding its way higher. Certainly we had a very nice kind of reflex rally yesterday. Seeing the market put in some more solid gains today, although a stock not putting in solid gains is Twitter, and we saw just insanity after hours. Kind of points out, the pitfalls if you do trade after hours. Stock initially shot up to 41 post earnings on an MAU number that was later kind of refuted, so traded back down all the way to 31 subsequently, so had a 10-point trading range on Twitter, 41 to 31. Stock is trading right around 32 last I looked here. I kind of like it on a implied volatility and almost price action basis here. Looks like it may have put in a kind of short-term low here given the veracity of the sell-off. Also the fact that implied volatility's really come in. So I'm buying some cheap calls for next week, the 3150s and 32s, just looking for a pop. And there's always that chatter in Twitter on a possible takeout. So we'll see if that comes to fruition. Also taking a look at CVC, a stock that has repeated and unrelenting call buying. Those RB Trader option scanners keep picking it up. September 30 calls since a week and a half ago. 32,000 contracts have traded, all fresh buying, all new open interest. The stock is down a little bit more than $1 in that time frame. The calls are actually up in that time frame. So I kind of liking a very kind of guarded position here on a buy right, buying the shares, selling those calls. It's a fairly aggressive trade, so I'm position sizing smaller. As always, I think risk is your first consideration with position sizing. Other than that, we're in this trading range, narrowest trading range really to start the year ever. We've had a 6-point range since the beginning of the year, 4% range, on the S&P since February. So we're seeing these violent moves, but maintain within a trading range. So a very, very strange market to say the least. And I think it'll continue till we break out. So we're really looking, at 2100 to the upside, kind of that 1950 to the downside on the S&Ps until we break out convincingly from those levels. We're probably going sideways here. We're all waiting for the Fed minutes to see if the Fed really is going to raise rates in September. We'll wait and see. We saw a big rally yesterday after a very weak consumer confidence number, also a very weak housing number today. So this may allow the Fed to jawbone again, say they may raise, but ultimately not, which would obviously be bearish for the dollar, probably good for gold and oil going forward. So until next week, this is Tim Bigham, and as always, especially in this kind of insane market action environment, keep those position sizes in place and those stops going. Take care.